All right, Victor Isibor here. Let's do a little bit of trade analysis. Now, let us understand one thing. Crypto is not for the fearful. Now, if you are driven by fear, you will not listen to the voice of wisdom. You will listen to the voice of your fear. And crypto is not also for those who don't want to learn. You need to learn because ignorance is a disease. Ignorance makes it difficult for you to understand what is happening. Now, for you to appreciate what is happening around you, you need to first of all understand it. Okay? That a situation looks scary does not mean it is scary. If you have the knowledge, then you'll be able to understand that it only looks scary, but it is not exactly scary. Now, that a situation looks appealing and sweet does not mean it is sweet. It all boils down to understanding. That is why I make all these videos. But unfortunately, people listen more to greed. That's why they do Ponzi schemes. They listen more to fear. That's why they are unnecessarily panicky, even in situations that don't yet warrant all the panic. Now, I have two trades here. Look at ADA. ADA is a buy. Okay? It is predicting that market would go up. And the reason I am in red right now is because market is going down. How do I know market is going down? Because I predict buy and the market is actually selling. Look at the entry price, 0.6219. Look at the current market price. Market has gone down to 0.570. Look at the liquidation price, 0.480. Now, a lot of newbies, they will look at these two trades, this ADA and Uni. They will tell me that this Uni is a worse trade than this ADA. They will say that this Uni that I circle is a worse trade. Do you know why? They will tell you, look at this Uni. It has minus 1,056%. That's a lot. That's too risky. That's where their eye will go to. Anything red that is flashy, that's where they will pay attention to. They will now look at this ADA and tell you, oh, just minus 456%. Oh, it's not risky. You see that ignorance is a very big problem. Now, do you know that this Uni trade is far safer than the ADA trade? How do you know? In my ADA trade, there's a liquidation price. They have told me market has fallen from 0.62 to 0.56. If it continually falls and it gets to 0.48, you are already liquidated. Your total account will be wiped out. Remember, we are trading cross. Cross means if this margin, market moves against me, this margin finishes, go to my available balance, cross over to my available balance, pick another $21. Continue to replenish until your available balance is finished. And that is what liquidation is all about. I have a liquidation price on ADA. I do not have a liquidation price on the Uni. Stop focusing on the red flashy numbers. Understand the basics and rudiments of your back office. In the Uni trade, I do not even have a liquidation price. I don't. This Uni trade is safer than this ADA trade. And that is why you see that I set a stop loss. I set a stop loss for the ADA trade. Why? Because I have a liquidation price. Okay? Now, see the current market price. And they have told me if the price falls to 0.48, I'm in trouble. Look at my stop loss. I said, okay, once it gets to 0.4, take me out of the market. Let me take the loss. Don't take me to 0.48 and finish my money there. But this Uni trade, I do not even have a liquidation price at all. Now, a lot of people also ask, the bot has a stop loss. Okay, it is inbuilt stop loss. But as a security and safety measure, I also double check to make sure I set my stop loss manually on the exchange as well, as a double check. Because there are times when the exchange will deliberately ignore the inbuilt stop loss of the robot and claim that, oh, we did not know, we did not notice there was an API glitch. They will say there's an API glitch. They will ignore the inbuilt stop loss of the robot and liquidate you on the exchange. That is why on my own, I always come to the exchange as well and put a stop loss, which will now be like an open order on the exchange. If they don't notice the stop loss on my robot, they cannot claim that they did not notice the stop loss. That is an open order on their exchange. Okay? So when you don't have a liquidation price yet on your trade, there is no need for excessive panicking. Even when you have a liquidation price, you have to also do your analysis to look at the distance between your current market price and the liquidation. Now, currently I'm at 0.56 in my ADA. Had it been my liquidation price on this ADA was 0.1. 0.1. I'll consider myself to be still very far from liquidation. So that liquidation price shows up does not mean that you are already in deep waters. It is just a warning to tell you that if it gets to this stage, you are in trouble. But you have to analyze the distance between the mark price and the liquidation price before you get unnecessarily panicky. Now, also, to newbies, that the moment they see red, they are like, what can I do about this trade? I'm seeing red. Yeah, there is need for basic understanding of crypto. Crypto is for everybody, and crypto is not for one person. Listen to that again. Crypto is for everybody and it's not for one person. When you are trading crypto, it's either you are predicting that the market will go up when you are trading futures, or you are predicting that it will come down. You will choose one. It's either you are longing or you are shorting. Now, do you know the interesting thing about crypto? Look at a typical crypto graph. It's like this. It is volatile. On per second basis, crypto is going up and coming down, going up and coming down. So it is never possible that the crypto market is always in your favor. It's not possible. It is in the favor of everybody. Because on per second basis, prices are fluctuating up, down, up, down, up, down, up, down, up, down. Market will not, because of you, and say they will be going only up because you are predicting up. It is not possible. There will always be red in your trades. And there will always be greens in your trades. Now, it's all about the settings, the money management you are using on that trade that will make sure, that will ensure that you survive the red waters. And that will make sure that you will swim to the green waters. The best trader in the world, even if the person is an alien from Jupiter, if he comes and trade crypto, there will be red in his trade because the market is always up, down, for you, against you, for you, against you. Market that is for you now will become against you in the next few seconds. It is the reds that birth the greens. You cannot love the greens and hate the reds. Crypto is volatile. Those that are smiling today will cry tomorrow. Those that are crying tomorrow, if they don't give up, they will smile tomorrow. So don't come into crypto thinking you will have it all good, every day smooth. No. All right? But it's important you understand what is happening in your back office. Now, some people have asked, how do you set a stop loss? Now, there's no stop loss on my uni. Let's pretend I want to set a stop loss. First of all, note my mark price. 4.8 is my mark price. I don't know what the liquidation price is because I'm so far from liquidation. There's no liquidation price here. But let's assume that I want to set my stop loss at 3.0. Okay? Because I'm predicting up. Market is going down. So the liquidation price that I'll put will be a down price. A price that is lower than my entry price. That is lower than the current market price. That's the price I'll put. Remember, if it's a short is predicting that market will go down. If market is going up, it is moving against me. So my stop loss will be a price that is higher than the current market price. All right. It's just like the opposite of long. Okay. Long now, my stop loss will be a price that is lower than the current market price in a long trade. In a short trade, it will be a price that is higher than the current market price because short is predicting going down, but market is going up. So when it keeps going up, put a price at the upside to stop it, to prevent you from getting liquidated. So this particular uni trade, current market price is 4.8. Let's say I want to set a stop loss at 3.0. This is how you set a stop loss. This is a Binance back office, by the way. Tap on the trade. Tap on the trade. Okay, now see the other stop loss that I have as an open order. Look at it. It's under open order in Binance. All right. And that's where your stop losses and take profits go to. They go to open order. Now let's set the stop loss on uni. Okay. Now that I tap on the uni trade, you see this one, TPSL. All right. So let me tap on TPSL. When you tap on it, you see TPSL. Click on position TPSL at the top. That's where we're going. Position TPSL. Tap on it. Now look at this place. Stop loss. Trigger price. So you just write your price. Okay. Look at the market price at the moment. This is the current market price. This is a long trade. Like I said, in a long trade, the stop loss is lower than the market price. Okay. In a short trade, the stop loss is higher than the market price. So this is a long trade, and I'm putting my trigger price at, let's say, 3.0. 3.0. All right. So now you see they immediately wrote how much I will lose if this stop loss is hit. Okay. So if I want to confirm it, I'll now click on confirm. I don't want to put a stop loss on this particular trade, but I'm just showing you how it's done. Okay. They will show you how much you will lose if stop loss is hit. Click on confirm. When you click on confirm, the stop loss will be set. The stop loss will now do what? It will appear in open order. Open order. You see it in open order. Click on open order. I have a stop loss set for my order already. All right. So when market gets to 0.4, before it goes below it, my order would be closed. Adibin, I said that for uni, you will also see a uni open order here. Keep learning, guys, and keep improving and keep winning. I'm Victor Isibor. I'll see you in the next one. Until then, it's bye-bye.